What's up, everyone? What a great conference so far. The Stellar Development Foundation's put on an incredible event, incredible venue. Like she said, I'm Matt. I'm a research manager at Masari. I cover Stellar as well. Write the uh, write the Stellar ecosystem report, and I've got another report coming out on RWAs. So Masari, we're the leader in research in crypto. We're the leader in market intelligence. So check us out. Check out those reports. I'm joined by at the back here, Chuck Zang, Chief Financial Officer and at front end of cross-border payments provider Polyflow. She joined in 2024 after a 15-year career in investment banking. Polyflow has facilitated over 800 million in cross-border payments to date. I'm also joined by Antonia de Silva Souza here, Director of Crypto at Visa in Latin America and the Caribbean, where she's focused on stablecoins and asset tokenization, and Kazım Özyılmaz, co-founder of global settlement banking platform ARF, which has facilitated over 3.25 billion in loan originations and 6.5 billion in total volume. So today we're here to talk about stablecoin lending for a new era of global finance, to explore how payment finance, called PayFi, can overcome regulatory hurdles, technical barriers, and adoption challenges to create more inclusive global financial systems. Right now, we'll discuss the future of hybrid finance models, where legacy institutions like Visa and traditional banks integrate stablecoin lending solutions to deliver faster, cheaper, and more accessible financial services worldwide. So, Chuck, I want to start with you. Can you just go over what PayFi is and illuminate this with a real-world example?
Yeah, sure. Absolutely. No problem. Before we actually talk about PayFi, I should probably define what payment is in general, right? So I
Did
think
I?
everybody is on a retail side, you're thinking of, going to a merchant and just paying with your credit card, right? And boom, money's there. You don't have to worry about it. However, when we're talking about, business side, a B2B payment type of thing, the general rails from, let me give you a real world example from Brazil to China. It's actually, if you're going through the banking system, it takes about anywhere between 4 to 6 days. Going through U.S. onshore bank, and then maybe possibly London, then going over to Hong Kong, and then going into China. So that's anywhere between 4 to 6 days, and anywhere between 6.5 to 10% of actual cost. That's real costs to small businesses that they have to pay just to pay their suppliers.
Yeah.
Right. So this is in general payments. Now, for a stablecoin in terms of payments is that you are able to do this much quickly. You're taking out all the middle layers, able to do this for under 1% of cost and doing it at T plus 8 hours. And on the stablecoin itself, it's like T plus few minutes, but then the off ramping such will take a few hours based on the time differences, right? So that's essentially payments. Now, if you're able to take the proceeds from those payment processing and then pass it on along the liquidity providers or retail liquidity providers or regular users, that's kind of, giving a finance portion, the financing part of PayFi, right? So for what's something that's used to be for banks alone, that's a perk for bank that does this, now is available to regular users. That's essentially what we mean by PayFi.
Yeah. Just to follow up, what's the crux of the challenge? So, right, if I'm a retail user of crypto and I send stablecoins to my friend who, say, is in Turkey, and then they just off ramp at their centralized exchange, there's almost no fees there, right? But where is that last 1% of fees? Like, where are the pain points right now?
So the biggest pain point, from a retail perspective, as you said, a lot of the places you can do it for relatively like free, essentially. But when we are talking about business to business, right, we're talking hundreds of thousands, sometimes hundreds of $1 million moving across border. That actually becomes a lot harder. Just the on ramping alone. I don't know if anybody in the audience that does this, but try on ramping more than $100,000 at a time. You're going to have all sorts of enhanced due diligence. And for businesses, if you're trying to on ramp, $1 million, your banks, the first reaction they're going to have is, what in the world are you doing? And I'm going to cut you off like immediately.
Mhm.
Right. And then the off ramping part alone has all sorts of regulatory scrutiny as well as banking due diligence to say, hey, where's this money coming from? Why are you on ramping here in this region? That's
Gotcha.
where the crux of the problem is.
Yeah, Kasim, do you have anything to add to that?
Can you hear me? Yeah, perfect.
We can hear you.
So, kindly you explained this from a retail customer perspective, if you are a payment institution and dealing with the bank, obviously you have 100x more problems than this. So extending on the PayFi definition of the payments, a quick look on what PayFi is. So from our perspective, with ARF, we are seeing defining this as financing of payments and how you finance payments, right? As is. And effectively, it is in this example, what are the friction points? If you are looking at this flow, you are going to see that there is an off ramp at the end, right? And if the flow is not right, if the time zone is not right, it is definitely not going to be the same day for sure. And payment institutions, regulated institutions have additional issues. Like if you are getting cash from your customers, you are unable to convert it to stablecoins and send it because you have escrow account requirements, you have regulation requirements. So from our perspective, we are enhancing this by providing liquidity that you will be able to tap for payment settlements, where ARFS comes in and provides you a short-term working capital, which is 1 to 5 days, and you will be able to close the gaps in 1 to 2 days, where you will be able to convert the funds in stablecoins and settle with us back. So this is how we see it, at least.
Yeah. Yeah. Antonia, obviously Visa's huge. Where do you fit into this picture? What are the solutions Visa's offering? Like where do you fit in here?
Well, Visa is a global leader, and we always will remember that. But when we are talking about stablecoins in the crypto environment, it's not something that we are starting to use right now and starting to develop right now. We have been working with crypto for so many years. Just to take in mind, and from the last years, we have been able to uh, facilitate the purchase of crypto for over the 95 billions of dollars in crypto. So Visa is working, and we are on this landscape of the crypto environment. And what we see right now is our role here is to be that bridge that's connecting the traditional companies and the crypto environments. We are already known as a traditional that the traditional markets already know us as a trustable partner, and we are connected with the central banks, regulators, and with the crypto environment too. So, but at the end of the day, it's like the traditional and the crypto is talking a different language. And what we are doing is connecting those points, and we are doing that by enabling stablecoins into our systems to settle with Visa during our into our treasury systems. Enabling Visa Direct is one of our solutions, and we are adding stablecoins as one of our solutions. And of course, in order to increase the retail market, we are enabling the stablecoin linked cards. Then this is one of our great solutions, because when we see the retail market, the use of stablecoins is still much more on the institutional part, and the retail is just 1% of the market. And with the stablecoin linked cards, we are connecting a traditional cards like Visa that you have in your wallet to your crypto wallet, and you can use that to spend on a grocery store or to book your flight. So Visa is trying to reduce the friction that we know that there is in the crypto environment and connect the traditional too.
Yeah, that's interesting. Chuck and Kazım, I just want to circle back. So the big idea is like, hey, with traditional banks, 4 to 6% to move the money from Brazil to China. Now it's less than 1%. Are the banks not mad about that? That like you're offering, a 5x, 6x better solution? Are they not trying to cut you out through lobbying or regulation, or do they just want to be like, okay, it's inevitably going here, but we from a legal standpoint are going to make it so the lawmakers have to write it, so we have to be the ones to offer this at less than 1%? Like, what's going on behind the scenes?
At least from our perspective, the banks are very much against crypto, even in this current day environment, right? A year ago today, that would have been the norm. Your bank, as soon as they heard about you having anything to do with crypto, they would have shut you down. But today, it's a little bit better, but they're still doing very much the same thing. Onboarding onto a bank, and they hear about your usage of crypto, then all of a sudden you're going through several layers of due diligence, and essentially them not wanting to actually onboard you,
Yeah.
right?
So then,
So it's actually happening where the banks are actively working against us. Now, some banks, are kind of turning around, but I feel like this is one of those things. Our banks are being forced to kind of get with the times, right? So unless it's either they actively pivot or they'll have to be forced to pivot at some point.
Yeah. So when you're going from Brazil to China, is it hard to even find a partner to do those fiat on ramp and off ramps? Or can you give like a concrete example of that?
Oh yeah, sure. I mean, we ourselves do a lot of off ramping in Hong Kong to facilitate all the Chinese payments. On ramp, we generally there are a lot of on ramp services out there, OTC desks, and so they those we generally rely on local partners to on ramp because they know the local space much better than.
And is it like you took a month, you couldn't even find a partner, or you're able to find a partner and it's the upcoming upstart bank that, hasn't had its license pulled yet? Like, what's the story?
The timeline, these plans are measured in years, not
Yeah.
months.
Okay.
For sure.
Yep, absolutely.
Kazım, anything else to add on that broadly?
I'm going to just coming from a different direction. Lead bank, and in the end, it created a huge interest around the industry, right? Lead bank supporting Bridge, and the acquisition of Bridge really made an impact. So effectively, if a bank approaches from a different angle, we see how much the industry can be impacted.
Yeah, that makes sense. In terms of other challenges, what are you seeing that are the biggest pain points, friction points for adoption?
I think for challenges in terms of adoption, especially in terms of lending and just payments in general, is there is still a lot of scams around. I'll give you a real world example. Not too long ago, we saw an invoice that came through that said, "Hey, we've got $6 million worth of cheese being transferred from one location to another via shipping. 2 weeks worth of shipping, premium cheese, no refrigeration." And we're sitting here going, how are you? And I mean, some cheese doesn't require refrigeration, but this is a premium cheese that definitely does require it. And there's simply no, the bill lady simply had no mention of refrigeration.
Yeah.
And we looked at the ship and it's like, there's no refrigeration that we know of. So immediately that's like red flag. So we absolutely have to, as operators and processors, do our due diligence. And these due diligence are coming in all shapes or forms, not only invoice and bill relating, but actually, talking to the guys, maybe even the dock hands to figure out what exactly they're doing. But these things are very, very prevalent. I think half of the guys that actually approach us in terms of either onboarding or on-ramping or off-ramping are something to do with either pornography or e-scams or phone scams or card scams. These things happen a lot. I think that as soon as we can get over this hurdle, and having stable and crypto being not just a place for scammers, we get much bigger adoption. I think it would make things a lot easier.
So you'd say about half is that, or more, because there's also other types of illicit financing, or
Right.
there's limited countries.
The moment you offer services like payments across borders, a lot of the restricted countries, people trying to navigate around Venezuela, Syria, Russia, and those kind
So
of
if you took
places.
all that together, what's the percentage?
I would say probably half of the guys
Half,
approaching us. Yeah.
Yeah. Antonia?
I would add the regulation and, of course, the interoperability, the infrastructure of parts of that. Well, we just saw the Genius Act coming out, and since that, the markets in all of the world start to talk about stablecoins, and just the clarity that the Genius Act came and bring to the traditional banks help them to start, okay, now I can take a look on it and I can start to develop some strategy based on that. And well, mainly my role here in Visa, I look for all the Latin America. And here, depends on the country, you have total different regulation. There are some countries that are more crypto native, there are others that are not. And this is very hard because there are the companies, the banks, and the financial institution is trying to rebuild the system in order to start to do something with stablecoins. And there is another part that is the infrastructure. And we need to be clear here. The traditional banks are not ready yet to start to work with stablecoins. And there is, we as Visa, we have been helping them developing infrastructure like the VTAP and other solutions that's helping those banks that want to issue their own stablecoins, that want to manage, burn, and mint stablecoins, and doesn't need to develop all this infrastructure inside house, but even if they use our product, they will need to develop some capabilities internally, and they are not there yet. There is no they don't have the skills yet into their teams, and this is something that they will need to deal in the time.
Yeah. Awesome.
In terms of challenges that we see, definitely risk assessment and the programs that the models that we developed, we are working on these things for years. Definitely very important. In terms of challenges, regulatory issues were a big thing. Now US market is opening up, which is very exciting. So at least they got it covered. The second thing is, if you are dealing with a payment institution, even if they are mature enough, you have to convince their treasury teams and their operations to adopt these enterprise-grade custody integrated into tech stack, and the treasury people that are operate with it. So normally they are not used to that mindset, right? Because the end game is you have a stablecoin treasury and you settle with it. But normally they are dealing with 200, 250 bank accounts all around the world, basically filling and refilling this. So the mindset, the people, and even if you're in a payment organization like this, you have to have new type of people that are convincing your counterparties, their partners, to settle in stablecoins, establish, suggest infrastructures maybe. So this is a process. These are very easy things, and I believe time will take care of this. The issues that are more long-term and ambiguous are whether we are going to see fragmentation in terms of dollar stablecoins, whether there will be dollar stablecoins that are allowed in US but not anywhere else, whether there will be Asia-specific USD stablecoin, and we have, I don't know, 4 or 5 layer 1 chains now specifically dedicated to payments, one for Tether, one for USDC. So how are we going to navigate in this environment? These are posing challenges, but we'll see.
Yeah, interesting. I guess just zooming out, like as a crypto user, right? I touched on this before, but I can take my USDC, Tether, whatever. I can send it to my friend in whatever, Kenya. They can off ramp to their local bank. Is there a world in the future where there's some sort of KYC platform or an amalgamation of them that allows for that? Because it seems like to an extent this is already solved for retail. Besides whales, like you said, some whale tries to off ramp 2 million at Coinbase and they get flagged, and then you see them complain on Twitter that they can't get their USDC off. It's frozen. They're messaging someone. But is there a world where the whales and the B2B have the same experience as the person on or off ramping $1,000?
I think we're actively working on, actually, there are a lot of projects that are actively working on this, the decentralized ID system, right? So even ourselves, we built out a decentralized ID where you are able to essentially, kind of say you own the data of who you are, right? So that ID, coupled with some zero knowledge pass-through technology, you're able to take some of the Web 2 credentials that you might have, be it credit or maybe memberships or such, that kind of complements your identity in the Web 3 world. Once you are able to get a single proper decentralized ID, then you're able to say, okay, well, maybe let me come put in some KYC information, right? So we actually work with SumSub at some point to do some KYCs, and they have a banking specific set of driven requirements to do these KYC. Once these KYC is done and properly, that information can carry with you, and while not being centralized. I think that's an important step to be able to do these identifications within Web3 in order to do exactly what you were talking about, because at the moment it's really fragmented.
Yeah. Anyone else, Kazım, Antonia, on that?
Yeah, I'm torn in this, because if you are not converting it to fiat, ramping off, why do you need it, right?
Right. Yep. So that's the other vision for the future, is that maybe you don't need the off-ramp itself.
Hopefully. Okay.
That's the vision you're betting on?
Well, it's the whole thing, the whole movement is based on this, right? So I believe I will be in a very conflicting position if I say that, okay, we are building these things and making sure that we have an idea at the end. So I don't know. I'm torn in this. I'm conflicted a bit.
Yeah. We've got a couple minutes left. I think we have a mic runner. Any questions in the audience? Nothing? Okay. We'll do one more. How about yeah, I mean, in terms of how large corporations are integrating these solutions, what are you seeing right now, Antonia? Like what's one example to leave us with? Just something concrete that people can take away.
Well, we have been working with banks like BBVA, and they are using our solution on VTAP, that's the Visa Tokenized Asset Platform, and they are using that to manage their stablecoin linked by euro, and to issue their own stablecoin in the near future. So what we are seeing is there are several banks and several institutions that are starting to take a look on the stablecoin and thinking of have their own stablecoins, and not just that, understand that stablecoin can be the tool that will help them to unlock the programmability, the programmable money, and will help them to develop new financial products. And that is what we have been talking a lot with the great large banks, because we see that the stablecoins is the first step that we have, not just for transferring money, but enable them to mitigate all the manual operation that they have, and have smart contracts that can enable them to have a better operation and better products at the end of the day.
Yeah. Well, thank you, everyone. This was so insightful. Antonia, Kazım, Chuck, thank you so much.
Thank you, guys.
Thank you.
Okay.